How exactly does a single index shatter the 72,000 mark practically overnight, even as global geopolitical tensions continue to simmer? Well, the answer is 72,354. Hello everyone, welcome back to AI Market News. As we can see in the chart, the Nikkei 225 has surged an impressive 1.55% to hit that historic level. According to current market information, this incredible upward momentum is being driven by a profound wave of Asian artificial intelligence optimism that is completely reshaping our financial landscape.
To really understand the scale of this move, we need to look at the underlying mechanism of equities. Basically, equities represent shares of ownership in a company, and their prices rise when investors expect future profits to grow. Right now, the anticipated boom from artificial intelligence is driving massive capital right into Japanese tech sectors, which is lifting the entire index for all of us.
Transitioning over to Wall Street, the graph shows a similarly robust story during regular Eastern Time, or ET, trading hours. The S&P 500 has climbed to 7,505.58, while the NASDAQ has rallied a very impressive 1.91%.
Based on available data, this ongoing U.S. rally is heavily concentrated in the semiconductor space and among our mega-cap technology companies. We're seeing major movers like NVIDIA up 2.95%, Intel jumping 10.64%, Micron surging 8.7%, and Amazon up 2.9%. So this brings us to a really important concept known as market breadth. Market breadth suit? This metric shows us exactly how many individual stocks are actually participating in a market rally. A tech-heavy index like the NASDAQ, rises sharply when just a few massive components see huge buying volume. And that lifts the broader market average for all of us, even if the smaller companies aren't really moving.
Shifting our focus over to the currency markets, as we can see in the chart, the USD/JPY pair is currently hovering right at 161.76. This really demonstrates continued, stubborn dollar strength against the yen.
Why does this matter for the stock records we just discussed? Well, it all comes down to exchange rate impact. Weikate no eikyo. A weaker yen makes Japanese exports much cheaper abroad, which generally boosts the overall profits of multinational companies listed on the Nikkei. And that effectively adds even more fuel to its record highs.
But it's not all clear skies. We must also look at commodities and geopolitics. The graph shows crude oil WTI remaining quite firm at 75.82 a barrel. This resilience comes despite the recent news that the Iran talks have, once again, stalled out.
The underlying mechanism here is called supply shock risk, kyokyu shock risku. When geopolitical negotiations stall, markets immediately price in the risk of sudden disruptions to the global supply of critical commodities. That keeps oil prices elevated for all of us at the pump and directly impacts corporate logistics.
We can clearly see this caution reflected elsewhere. As we can see in the chart, the VIX, which is widely known as the fear index, has ticked up over 6% to 17.51. This really indicates that while we're seeing extreme market highs, an underlying layer of geopolitical caution remains firmly in place for all of us.
With all of these moving parts across global markets, it's absolutely crucial that we prepare ourselves for the upcoming trading sessions. Let's pivot to the economic calendar to see what lies ahead.
While there are no major macroeconomic indicators scheduled for release today, June 22nd, we should definitely keep a close eye on the corporate front. We're expecting key earnings from FRVO and POWP. Please note that relevant market announcements are typically scheduled around Standard Eastern Time, or ET, while Asian market developments will track local JST hours. With tech driving these historic highs, will these upcoming reports add fuel to the fire or spark a sudden reality check? Well, only time will tell.
Thanks for watching. Please subscribe and hit the like button.
This video was automatically generated by Notebook LM AI. AI-generated content may include errors. This video does not constitute investment advice. For full details, please check the description below.